Hey everybody, welcome. I'm here with a good friend, Jeremy Jenson. He is a CEO of a company called Encore Search. They're one of the top search recruiting agencies in the United States right now. He's a self-taught multimillionaire. He is somebody that has probably more hustle and kind of grit than almost anybody I know. Welcome.
Hey man, it's good to be here. You woke me up early on a Saturday morning after a night of drinking. So I am of sound mind right now and ready to have a great conversation though.
That's awesome, man. And apologies for waking you up early, but I'm glad you're here. I'm glad you're here with us. You're kind of in this cool space of you epitomize the self-made individual. I'm sure that you've had a lot of kind of fortunate breaks along the way, but like I feel like you're somebody that's really made your own luck.
Yeah, man. I mean, it's been a long time coming. It's funny because, people come up to me all the time and they think that it just happened out of nowhere, right? And I tell people, yeah, it took me 10 years to become an overnight success. But yeah, so started my first company at 25 years old. That was a lead generation company. And then about 3 years into it, we started the recruiting firm. And so now we're the largest privately held executive search firm in Houston. So, yeah.
Dude, that's so impressive. But would you mind talking about kind of your background, how you grew up, what your education is, and coming from anywhere to be the largest privately held recruiting firm in Houston? And I really think you're going to be probably one of the biggest in the country on a high level within 5 years. What's more amazing or equally amazing is kind of like your background and where you came from. So I'd love to hear about that.
Yeah, man. So great question. And again, you have a little bit of a cheat sheet because Josh and I are actually friends. And so he knows a lot of the story already. But born super poor, Alief, Texas, which is a kind of a sketchy part of Houston, and had a single mom. She had me at 16 years old. My dad left when I was a kid. I've got a little brother who kind of functioned as like the mom in the house, and then I kind of functioned as the dad, and then my mom would work 3 jobs just so we could live in an apartment in a nice area because she didn't want me to go to a bad school, right? So I felt like that really contributed to my scrappiness, my hustle, right? And to be quite honest, I think one of the characteristics of a successful entrepreneur is to be very, very risk tolerant. And that's one of the conversations that I had with a good buddy last night was that, I think our growth, right, and where we've gotten in business has really contributed to the fact that I'm willing to take big gambles and I'm willing to invest large dollars into new applications or new divisions and things of that nature because I grew up poor. So I'm not afraid of losing everything because I know that I can rebuild, if that makes sense.
You're able to talk about it. How much revenue are you doing on a monthly basis for your organization?
Yeah, so we're big tickets, right? So the way that we charge is we charge anywhere from 25 to 30% of a candidate's annual base salary as a fee. So let's say we recruit a chief compliance officer for ICE, right, in New York, the Intercontinental Exchange. That person's salary, let's say for illustration purposes, is going to be $400,000. Our fee is $100,000, right? And so with that being said, it's low number of invoices per month, but high volume. So we hover anywhere between, I would say, 700 on an average month, all the way up to we're forecasting 1.5 in June. So, but when you look at our trailing 12 months revenue, I would say we're probably about 8.5 million.
That's pretty amazing, and that's
The
probably
cool
what
thing
like
about professional services, though, right? When you look at executive search, when you look at public accounting, engineering services, law firms, the EBITDA is extremely high, right? So we hover in between 33 and 38%.
I think probably what's the most impressive thing is your growth rate. I mean, having known you for 6 years, I think when we first met each other, you might have been doing $2 million a year in revenue for your business on an annual basis. So you're not venture backed. You're fully funded by yourself. And do you own 100% of your organization?
Yep. Mm-hmm.
So, you and I talk a lot. I think that's just so impressive because to have, functionally a 4x growth over 6 years, your IRR is really high, but it's exceptionally high when you realize that you haven't had outside capital infusion because it's all your money.
Yeah, and you know what? I could have done a better job at scaling faster. But about 4 years ago, we implemented a system called EOS, the Entrepreneurial Operating System. And the gentleman at the time, he was my vice president, then he was promoted to COO, and now he's the president of the company. He and I made the decision that we didn't want to have a culture shock in the organization. We didn't want to have those growing pains. We wanted to do it organically. We didn't want to sacrifice on service or quality. And so really when you look at where we potentially could have been, right? I think that we should and could have been probably doing 20 million right now, but we were kind of pumping the brakes, if you will, whenever we saw that, hey, maybe we're trying to grow a little bit too fast. But I would say we're pretty disciplined in the areas where we know we're experts, right? And we try to stay in our lane. And then the strategic growth initiatives is for us to bring in subject matter experts in the verticals we want to grow into. That way we can build teams around them. And so when you look at our 7-year vision right now, we're going to continue to 4X, right? So I see us doing 25, 30 million 7 years from now because of EOS and the definitive system and structure that we've put in place.
Look at it from my perspective. I'm thinking if I'm in your shoes. Houston, Texas is a very affordable city, right? Like it's the third or fourth largest city in the United States, but it's probably like the 20th most affordable. Like you can get a mansion for $1 million in Houston, right? And you're pulling down pre-tax like 2.5 million if we're thinking like 30x%. That's like an insane amount of money to be making, especially for how you kind of grew up, where you probably make more in a month than your mom made in like a decade.
My mom, bless her heart, has been with the same bank for 27 years. And she called me last week trying to negotiate her raise, thinking that it would be too greedy to ask for an additional $2,000, right? So just to kind of show you the humble beginnings and roots that my mom, has been in and is in today. But I'm very proud of her and very grateful for the sacrifices she made to set us up for success, my brother and I.
That's really cool. Your brother work with you, or is he working totally separately from
Yeah, man. Little brother, he's 30 years old. He's worked for me for about 8 years and started off as a, $10 an hour admin.
Sure.
And now he probably makes 250 grand a year as our operations manager. So I'm super proud of him. He's engaged. He's got 2 young kids with his beautiful fiance and just bought his second house. So I'm super proud of what he's been able to accomplish.
A lot of things that we talk about are like crypto. Are you getting into recruiting for the crypto spaces? Because what I'm seeing out there is like people are choosing Coinbase over like Goldman Sachs as like, top level HBS or Stanford grads are coming out and they're going into the crypto space in the same way people went into the venture space 15 years ago.
Yeah, absolutely. So it's definitely something that's on our Vision Traction Organizer that we want to explore into. To be quite honest, I do have some crypto in my personal investment portfolio. But with regards to us recruiting in that vertical, we don't have that intellectual capital today. And so that's something that I'm actively looking for is to bring in a vice president that has experience in blockchain and cryptocurrency. Because like you said, there's going to be a definitive need for individuals, whether it's engineers or analysts or portfolio strategists, right, that have that technical acumen. We 100% know that there's going to be a need in the market for it. And so, just like 5 years ago, we were having the conversation to say, hey, do we want to be in the cannabis space? Do we want to recruit for cannabis? And then we actually dipped our toe in that water, and then we realized that the fees were literally like a third of what we were charging in other markets. And we didn't know why until we looked at, there's so many people that are passionate about the cannabis space that'll just like work from home in their boxers as independent recruiters and will charge these super low fees just because they like to talk to botanists about marijuana all day. And so it was forcing the fees down in that vertical. And so we made the decision not to explore that.
I'm going to tell you something that's really interesting. So I interact with a lot of the owners of whether it's cryptocurrencies or companies that are interacting in the space. It's the exact opposite in crypto. And I'm going to explain to you why. It's insanely hard to recruit good talent in the crypto space. So let's take Fidelity, for example. Fidelity and Coinbase are the two largest custody holders of institutional capital in the Bitcoin world. What makes it really challenging to recruit for a high-level individual in crypto space is that if they've been in the space for like 10 years, they're rich. If you invested $1,000 in Bitcoin 10 years ago, I mean, you are rich. I mean, like, seriously, you could have bought Bitcoin 10 years ago for like $30, and now it's trading at 30,000. So, I mean, for every $1,000 you would have invested, you'd have $1 million today. One of the guys I actually interviewed on my podcast, he was in the angel round of Ethereum. So he bought Ethereum for 50 cents, and now it trades at $3,000. So the reason I say this is if you've been in the crypto space and you're knowledgeable for more than 5 years, you have so much money that a $500,000 a year paycheck is just not motivational in any capacity. Because after tax, you're taking home maybe $250,000, and you're going to live in a major metropolitan market. And in San Francisco, to take home $250,000 after taxes is not really motivational when you might have $20 million in like the bank account. Yeah. So what this has done is create a pure deficit in the space of high quality individuals that are also still motivated by money. And it's a hugely untapped market. And I talk with so many people about it because you only have a window of someone has to be in the space for maybe more than a year or two, or else they just don't know anything. But if they're over 5 years, they've made enough that they're independently wealthy if they have any level of competency. And you could have invested in Ethereum, Bitcoin, Dogecoin. I mean, we could go down a list of 100 cryptocurrencies. If you put more than $2,000 into any of these currencies, you're probably rich today. And so that means that the price people are paying for engineers is incredibly high. The price people are paying for marketing professionals is incredibly high. And the ability to find those people correctly is so rare. It's the antithesis of the cannabis space, where in the cannabis space, if you've been smoking weed for 20 years, you're a pothead. Cool. Right? I mean,
very true. You're right.
I just think that is one of the biggest opportunities. And
absolutely agree. Yeah. And now I just need the individual that has that technical acumen to come in and start that business unit for us, for sure.
Let me ask you this. What are you most passionate about? Because you've probably achieved more success today than you would have ever imagined as a kid. What are you most passionate about today?
That's a good question. I've got an executive life coach that I've worked with for about 6 months. And, we're going through all of the facets of life, right? When you look at relationships and financials and social life and philanthropy and family and fatherhood and all of those components, right? And, when we started the exercise and, I basically rank things through a very laborious, question and answer type survey thing. It was interesting to see the areas where I really wanted to improve. But one of the parts of the exercise, which was the find your why, right? It was very, very difficult for me to define. I just wake up every day and I want to fucking win. I come into the office and I land new clients. I help recruiters close deals. I do my digital marketing. And, in our business, whenever you're motivated by winning, I would say that this is a good industry to be in, right? Because there's probably 7 different celebrations on every single search, right? So number 1, you get the client, right? Number 2, you get the job order from the client. Okay. Now you find a candidate, then you get an interview, then you get an offer, then the person starts, then you get paid, right? And so there's a lot of high fives going around in the Encore search office. But when you say, what am I passionate about? I think that the short answer is I love to win. And a byproduct of winning in my business is I make a lot of money, right? The challenge is I'm constantly comparing myself to other people because I need to win, right? And so while money in the bank is a good way of keeping score at if you're winning at life, right? It really is irrelevant to how happy that you are. At least that's been my experience. But, so if I have a friend who, let's say I've got a 2020 M5 and I've got a 2020 Raptor, right? Those are my dailies. Well, when my buddy got the 2021 M5 competition, and I said, holy shit, like they tweaked the taillights. I got to win. I got to go get the M5 competition. I got to get a better one, I got to get the limited edition. Oh, let me get the M8. And so I would say that that's what I'm passionate about. I love to win, but almost to a fault because
What does winning mean for you, man? Because like there's so many ways to define a win. Like,
yeah.
Is it the cooler car? Is it that you're the smartest person in the room, the hardest working person in the room, your team is the happiest, you have the highest net worth? Because like your family's happy, right? Like there are a million ways to define a win. How do you define it?
And that's the struggle. It's a constant grind of trying to achieve 10 out of 10 and all of the things that you just explained and shared, right? And so, I do look at, okay, what is my Glassdoor reviews, right? What are our Google reviews? What are all of these things? Because I want to win. I want to be, a 5-star rating, right? And one of the struggles that I've experienced is when is it ever enough? When is it ever enough? It's almost gotten to the point in our firm to where like we don't even celebrate 50K invoices anymore because they're so common. We only celebrate 100K plus invoices. And for the new people that have been here for 6 months and they're getting out $57,000 invoices and it's kind of just business as usual, we don't take them out to lunch, right? We don't go to Top Golf. We don't we don't give them a $500 spot bonus, right, for closing a big deal. You almost lose the edge of what got us to where we were. Does that make sense?
And I think that's really valuable that you're so self-aware of that.
We have to be better. We have to be better. We have to be self-aware. One of the things that's gotten us there is when Scott Kelly, who's now the president of our firm, came on board 5 years ago. I wanted him to run a business development desk, right? If I'm going to pay somebody a 6-figure salary, in a firm that's doing 1.3, 1.4, right? I wanted him to account for revenue, and he said, Jeremy, in order for me to do my job effectively, I cannot be a revenue producer. But what I can promise you is I can increase the productivity of every one of our producers by 10%. So then when you look at the law of compounding to where today we've got 28 revenue producers, right? And you go 110 times the 28th power, that's a pretty big number on how much processes, systems, accountability, emotional intelligence, right, contributes to the bottom line.
How do you keep your team so motivated, right? Like, because your job's a grind. I mean, I mean that in like a very much that I'm impressed type of way. Man. Because, I look at the math, you probably make 10,000 cold calls and you probably end up with 10 paychecks off of that. Right? So it's probably like 1 in 1,000 from a...
1 out of 4,333.
Okay, so even less. So you'd end up with 2 closes. How do you keep people motivated across the 4,000 X?
Yeah, so one of the things that we've done is we've recognized that hunters and farmers are very different profiles, right? Mm-hmm. And I think that most organizations, they want their salespeople to be good at filling out the CRM. They want their salespeople to talk about, architecting the solution, but then they also want them to make cold calls to get the meeting. And I think that's a very flawed way of looking at business. And so what we do is we hire people to make cold calls. We hire people to manage the data in the CRM. We hire people to manage the client relationship. And then the principal of the business unit is the closer. And so there's 4 people in on every single deal. And when you have such very narrow, acute responsibilities and KPIs that you need to hit, you literally remove the creativity that goes in the deal, right? Like, stay in your lane, do this, and you have the confidence to know that your partner on each side of that deal, right, is an expert and extremely competent in what they do. And it's literally like, you're only as good as the sum of all your parts. And so I would say that that's been our secret sauce. That's how we can keep our people so motivated, is because they don't need to get distracted, right? You need to focus on what your role is in this, right, sales chain. And then that you have highly competent people that are all motivated by the same core values as you, and then we just close deals.
So smart, and it's one of the things that's broken in a lot of organizations, right? Like, I'm just going to take the legal practice because it's not your industry, but as a law firm, you start out as a junior associate, you're doing document review. Then if you're good enough at that, then you move up to actual legal work. Then if you're good enough at that, you get into the interpersonal interactions with the other side. And that's counterintuitive because some people are really good at legal work and not so great at interpersonal, and the same vice versa, right? And so it's kind of like your organization, where what you've identified is you shouldn't have to start out as a lineman in order to work your way up to a quarterback, right? Like, there are quarterbacks, there are wide receivers, there are linemen, and let's separate those people out because they're different builds.
And the lineman is just as valuable as the quarterback, right? I mean, he might not get a lot of the glamour, but we're seeing left tackles sign $22 million a year contracts right now. I'm not going to say that my cold callers are only worth $18 an hour plus $50 spiffs. I have somebody that's a recruiter in my ESP financial group that made $238,000 last year in 2020 in a global pandemic, making fucking cold calls, right? And so it's about incentivizing the right behaviors and recognizing that, hey, I'm no better than that person. That person's no better than me. We have different roles that contribute to the success of the top line.
That's really cool. Mm-hmm. When I look at kind of where you're at, you've made a lot of progress. One of the things I think you've been most self-aware about, as I've been your friend for years, is that you need to grow, right? Kind of what got you here won't get you there. Yep. And I know a big foundation for you is being parts of these entrepreneur organization groups, or groups of high-level individuals. What are the biggest things that you take away from being a part of groups of leaders, or things that you learn?
Yeah, so I was a member of Vistage for 3 years, which is a big peer-to-peer executive advisory group globally. And that's actually how I met my integrator, who's now my president of my company. He was in the same Vistage group as me, and ended up coming on board. But after I recruited Scott, I dropped out of Vistage and I joined the Entrepreneurs Organization. And EO is basically like a global fraternity of over 14,000 entrepreneurs. There's very strict thresholds on how you qualify. I think you have to do over 1.5 million in revenue and have at least 10 full-time employees, right, in order to qualify. Well, in the US, there's a lot of people that have small businesses that would qualify, right? I own a restaurant, I'm a real estate developer, right? But if you have over 10 employees and over 1.5 million in revenue in China, right, you can imagine we've got some pretty major heavy hitters, right, that are in EO. And so it becomes a pretty amazing fun fest whenever we're doing events globally. But, one of the things that I got from EO when I joined 3 years ago was I was an arrogant prick. Josh, I was a millionaire, probably not unlike you, right? I was a millionaire at 30 years old. And every single room that I was in, I always knew that I was the smartest guy in the room. And you know what? You don't make a lot of friends whenever you're cocky, whenever you're arrogant, you brag, right? You try to one-up people. And I really did kind of ostracize myself from a lot of my college friends, right? And I didn't even know that I was doing it at the time. And when I joined EO and I surrounded myself with people that didn't make $1 million a year, they were making $1 million a month. And then I saw how they interacted with the janitor, right? How they interacted with people. And it wasn't about them. It was about the other people. How can I serve you? How can I take care of you? That was really an eye-opening experience for me to say, holy shit, I grew up poor as fuck, and I've got this chip on my shoulder, and it's my own insecurities that's making me behave this way. Well, when EO took me in and said, they didn't say, hey, Jeremy, you're fucked up, you need to fix it. They just hugged me, you know, and said, come with us, right? Just watch. And it completely transformed my outlook on what I value, right? Because it's not about the dollars that are in the bank. I saw a meme the other day. It said, if you want to be happy, focus on doing stuff for yourself, right? And that's very true. But if you want to be fulfilled, then you need to focus on doing things for others. And that was a light bulb moment for me. And that's what EO has brought for me. I've been a massive mentor to young entrepreneurs, right? I've spoken at several entrepreneurship programs for the universities here in Houston. I've mentored some of the younger entrepreneurs that have come into EO that are just now hitting that $1 million mark. And they're looking at us saying, holy crap, you did $1 million last year in revenue? Yeah, I did. Let me show you how I got there. Let me block out a half day and talk to you about marketing automation tools, right? Talk to you about building a call center and direct marketing through cold calling efforts, right? And so I feel like there's so much to give whenever it comes to just knowledge transfer. And that's one of the things that EO has taught me, is that it's not about me, it's about other people. And guess what? It will come back to me 10x.
I agree with everything you said. It's very thoughtful, and it's interesting the first time that you interact with what are like real heavy hitters. You grew up around people that are only in like this social circle, and you're a step above. Who are your mentors? Maybe it's somebody you've seen on TV. Maybe you watched Wolf of Wall Street, and that's how you think you're supposed to behave, right? Like, but then when you get around people that are not bragging and they're doing 10, 20, 100 times what you're doing, and they're, thoughtful of the people around them, that's a big eye-opening learning experience.
Absolutely, because then it's not just the guy that's isolated in his big ivory tower at the top of the hill, right? It's the guy that's being recognized by his peers for his community service, And, I'll shout out to a couple of people that have been great mentors for me over the last couple years in EO. So there's a gentleman by the name of George Joseph. George owned a rehab clinic, and he sold it for a lot of money. And then he had a 7-year non-compete, and during that time he went out and bought a restaurant and helped commercialize that into multiple locations. It's called Common Bond Bakery and Bistro here in Houston. And then when his non-compete was up, he started another center called Positive Recovery Centers, where he helps people overcome addiction, right? George was a multi-millionaire, right? 10 times, 20 times my net worth today. And George, at any instance, if I called him, he would pick up, and he would say, "How can I help you today? How can I serve you today, George? I need to have coffee with you. Can you make it work?" He would always say yes, right? And so George didn't give me advice, but what he did was he was always there to hear me out, and he gave me a shit ton of experience share for somebody that's been in business for 20 or 30 plus years, right? I don't think that we need all the answers through somebody giving us advice, but we need to learn from some of the challenges that they've been able to overface in their careers, right? And so George has been incredible. 2 days ago, the other gentleman who I referenced, his name is Robert Wagnon. Robert owns a mortgage company that has over 40 branch locations all across the nation, and they do over $1.6 billion a year in revenue. And Robert is the 100% owner of that business, right? And so to think that, Robert would block out his evening, take my president and I out, go clay shooting, right? Have a couple of drinks, grill steaks, and not even talk about business. Jeremy, where's your head at? How are the kids? How is the single life, right? But these guys are unbelievably incredible. And guess what? It's I think that's the big difference from the person who's sitting in the big ivory tower with the 10-foot wall around their house, or the person that's sitting there right on River Oaks Boulevard with no wall, no gate, door wide open, saying, "Hey man, let's chat." And so there's two very different types of successful individuals, but it's about the way that those people make other people feel that will kind of like take their legacy into the future.
Yeah, man. As long as I've known you, I've kind of always seen you as somebody who builds up the people around you. And as much as you say you were like arrogant, yeah, I mean, I knew you 4 or 5 years ago. You were kind of always understated, I thought. Just kind of from looking at your background and you being self-aware. Like I never would have used the adjective arrogant to describe you. I think that you're hardworking. I think that you've got a ton of hustle. But I never saw an arrogant side. And maybe it's
I
just
think I was
our
turning a
interaction.
page. I think I was turning a page when you and I met 5 years ago. And again, a big contributor to that was going through a divorce and the humility that creates, right? I told you I love to win. Well, I'll tell you what, getting a divorce is one of the biggest L's you can have on your on your resume, man. And it was a very humbling experience for me, and going through therapy and doing some self-discovery at that time and in the several years since has really, given me a lot of insight into myself and how I interact with others.
I'd make an argument that getting a divorce is not an L at all. I mean, I would make an argument that you as an individual grow. I mean, you got married very young. And the person you were when you married your wife is probably a very different human being, agnostic of financials, but just like emotionally in a very different spot. And I think that's common. Like I wouldn't think of that as an L. I would think of it as, okay, like you reached a point where that is not bringing joy and happiness into your life and you need to recalibrate. The person I was 10 years ago is a very different human being than today. And unless you meet somebody that perfectly grows at the same pace as you, it's just going to be a challenge. And so I would never put that as an L.
Yeah, well, thank you, man. Thank you for sharing that. And, it's so funny that you say that. So I got married at 25 years old, right, and divorced at 35. But you're right. I mean, we changed so fundamentally different, right? So when you look at the Vision Traction Organizer in the U.S., there's three things that you define: your mission, your vision, and your values. To where Lisa Jenson and I, when we started right here, and we were both growing and improving as professionals, right? But what we were doing is we were growing in opposite directions, right? And so our mission became very different. Our vision became very different. But one of the things that always stayed the same was our values, right? And that's the reason why we're such good friends today and why we co-parent so well with our three children is because we have the same exact values, right? She knows that I'm not going to, take the kids into Twin Peaks, right? And, have girls in lingerie parade around them, right? She knows that I'm going to support the fact that they need to get back that way they can go to church, right? And so, I think that having similar values is critically important, whether you're married, whether you're divorced.
By you making the decision, or you and your wife, former wife, making the decision that it doesn't work for you two to be together, that's probably the most emotionally healthy thing you can do when you reach that impasse point.
So let me highlight this because you probably have several entrepreneur listeners that are married or dating. I was married to a petroleum engineer for 10 years, graduated salutatorian of her class, Georgia Tech, dual major. This woman has never gotten a B in her life. Played Division I soccer, right? The most risk-averse person that I've ever met. She had a scarcity mindset, right? If we had a $500,000 in the bank, she would try to protect that. If we had $1 million, if we had 1.5, $2 million, she didn't want to invest. She didn't want to lose it. It inhibited my growth, right? So it's funny when we became separated and started to make financial decisions independent of her, that's really what almost helped contribute to our growth because I can go out and get principals of my firm that had six-figure base requirements, right? Where she would always buck me on that. I can go out and get the Class A office space that would attract, right, higher talented associates, right, whenever she was always averse to the price per square foot. And so I will say that, oh man, you need to be with somebody that strategically aligns with your risk tolerance as well. Because if you're married to a woman who fears losing everything in crypto or whatever it is, and you are getting FOMO every single day because your friends are getting rich, that's a recipe for disaster in a relationship.
You have to be in line with your interests, right? And you just have to be in line with kind of whatever your investment thesis is, whether it goes in correctly or incorrectly, that both sides are comfortable, right? Like that's just pretty logical. So, question for you, kind of on the next phase of things. You talked about investments, you talked about things like that. When I look at winning, kind of at some point, your investments are going to keep pace or outpace your income, even earning a lot like you're earning. What are you excited about investing in at the moment?
So I'm super vanilla, man. I was sitting on cash for so long because remember I was, married to the most risk averse person ever, and I always thought, right, okay, I'm going to wait for the crash and then I'm going to put it in, and then April of 2020 hit, and I put in a little bit. I probably put in $400,000, right, of 3.5 million. And I experienced some success, but I took a big flyer on this oil ETF whenever oil took that plummet. And I invested $200,000 in this oil ETF.
Is that the one that went bankrupt?
The one that went bankrupt.
Yep, I'm familiar
Right.
with it.
Fortunately, I was able to recoup about 70%, or I'm sorry, 30% of what I put into it the day before it got delisted.
Yeah.
And that was a massive learning experience. It basically washed all of the gains that I had in the other stocks where I thought that I was a fucking day trader, right? So at that point in time, I said, what am I doing, right? We make cold calls. We solve client challenges by telling them which executives they need to hire. Let me stay in my lane. Let me do that. And I'm going to give $2.8 million to my wealth management firm. And so I own a recruiting company that recruits wealth advisors, right? And so you said Fidelity earlier. Fidelity is actually a client of mine. ICE is a client of mine. And then several RIAs spread across the nation with other big independent broker-dealers as well. But I had a favorite client here in Houston that had amazing culture, tons of resources. They always communicated effectively with me. And I sat down with my client and said, hey, I'm thinking about investing with you guys. And he said, well, Jeremy, we have $1 million minimum. And I said, well, what about 2.8? And he started laughing. He didn't know that recruiting was so lucrative. And so I moved my money over to a wealth management firm. And I tell you what, Josh, super vanilla. I have no desire to get 140% gains in the market anymore, right? Because I lost a lot in that quarter whenever I thought that I was going to outsmart the system. And so when you model it out and you say, hey, if I can continue to make $1 to $3 million a year for the next 30 years, right, and earn 6% in the market, right, in whether it's bonds or ETFs or crypto or whatever, then I'm going to be a very, very wealthy man upon retirement.
You learned a very affordable lesson, right? And I realized to many people like a 300 grand loss or $250,000 loss is a lot, but it's not relative because your earning is going up. And if I told you, hey, Jeremy, why don't we sit down, $10,000 in front of both of us, let's play a game of poker, but you don't know the rules. I know the rules and you don't know the rules. You'd say, go pound sand, not a chance in the world. But what happened with your oil ETF is you didn't understand the underlying assets that were held in that fund. Your impression was that this was something that tracked oil. It wasn't. Right? In order to track oil appropriately, you would have needed to engage in like a futures contract.
Exactly.
And I think you and I were actually talking where I was like, giving you some plays on the futures contracts at the time where like that was the month that oil went negative, if you remember.
Yep.
You and I were talking about that. So I think what you learned is a very affordable lesson that you can't play a game you don't know. And that was so smart to take your money because you're a full-time recruiting guy and you might spend 5-10 hours a week on investments. How could you ever compete with an identical version of you that spends full-time on investments?
Right.
And it was a very smart play and a very good lesson for you to learn. I think that's really smart.
Yeah. So I'm hedged a little bit, right? Because I placed the director of financial planning. I placed the chief investment officer. I know their character. I know their integrity. I know their investment philosophy, right? I literally placed them at my wealth management firm, right? And so it's pretty cool to be able to move the needle, right? And how you find people to help manage your assets.
What's next for Encore? Like, where do you want to be in 3 years, 5 years?
So that's easy to answer because of our entrepreneurial operating system that we run on. So when you look at our 1 year, 3 year, 7 year, and 10 year vision, it's very clearly defined. So when you say, what does 3 years look like? I need to bring in a vice president that's going to help run our public accounting recruitment group. So that's something that we want to accomplish in Q3 of this year. And then after that, I want to bring in a vice president that's going to get us into engineering consulting recruitment, right? So think about, licensed PEs for civil, structural, mechanical, electrical engineering firms. And so that's how we've decided to grow, right? So we start a business unit every 12 to 18 months. You start it with an individual contributor. They generate some revenue. They get a junior recruiter. They have some success. They get an admin, they get a BD person, they get 2 more recruiters, and they just grow organically. And so we've done that 3 times now. So when you look at, golly, Jeremy, you're doing $8-9 million in revenue with 33% EBIT. That's incredible. We are in the infancy stages of what our firm is going to look like in 10 years. Because we only have 2.5 of those business units that are running and sprinting so far, because we've only been on EOS for 3.5 years. And so when you look at what 10 years looks like, I said we've got 2.5, because my legal group is still only, I think we have 4 people today. My financial group's about 17 people. That's the one that's all firing on all cylinders. My energy and manufacturing group is about 6 people, right? But the point that I'm making is I envision 8 business units of anywhere from 10 to 15 people. And that's what I'm super excited about.
I'm sure that you'll probably be, a $50 million a year business within 5 years. I think that's very reasonable.
I think that's closer to 10-year vision, but
no, I would place that back.
5 years,
Like,
we'll be happy with 25. Yeah.
Legitimately, I would say 5 years.
Yeah.
50 million. 8x multiple. That sounds about right, as long as you kind of stay in your lane and focus. You don't get distracted.
One of the challenges, I'll say, so I've got friends in the entrepreneurs organization that own staffing companies. So think about contractors that are on long-term contracts with employers. So your margins are a heck of a lot less. You're floating millions of dollars in payroll, right? You're sending invoices to the client that they're paying in 30 days, but you already had to pay the contractors. So much risk, but then when you look at the revenue figures, it's very high because the actual payroll of the employees is in your revenue, right? But here's like the tricky question in my industry, because there's a gentleman, and it's EO confidential, but he's in process of selling his firm, and he makes about $350,000 a year, but his firm is getting a $25 million valuation, right? Because of the value of their contracts, right? When you look at the businesses that he's on the preferred supplier list, and he's got 11 software engineers on payroll with them, right? And so what's the right mix? Do I want a business that's worth $30 million and I make 300? Or do I want to make $3 million a year and have a business that's worth $9 million? Does that make sense?
Yep.
What do you think is the right strategy? Cash flow or asset?
For you, 100% cash flow.
For me, yeah. You got a YOLO, man. Yeah, you got a YOLO at 37 years old.
No, I just think that for you, cash flow is going to allow you to live a lifestyle that. First thing I always look at for someone's enjoyment to capital is like what city you're in, right? Like you need a little bit more money in New York than you would need in Houston, like New York, San Francisco, London, maybe Japan, Tokyo, places like that. Those places require a little bit more capital. But looking at a city like where you're in, the amount of enjoyment that you can have making $2 million a year, or whatever number that you're making a year, is very similar to what you would make if you were making $25 million a year. The only, no, it sounds funny, but like, look, you're going to get your Ferrari, you're going to get your Lambo, you're going to pick up whatever car you like, you're going to have like a mansion, and your mansion's going to cost you $3 million. And then after that, where does the rest of it go? Well, I mean, maybe it goes to travel, which you drop $500,000, $1 million a year on travel. And
That's a
then,
lot of money. Yeah.
right, but I'm just saying, like, beyond that, where does the rest of it go? Well, maybe you get into philanthropy. Whether you make $2 million or $20 million in Houston, you're going to probably be living a very similar lifestyle. So why take the risk on trying to build a $100 million firm and losing that $2 million a year for you to go out there and say, I had a $100 million exit? That's counterintuitive to your personality type. So with how much cash flow you're generating, what I would do if I were you is maybe I take 5% of the cash that I'm putting in and put it into like some asymmetric upside bets, and that's not going in with your investor. But then, okay, you take a swing at maybe you get 1,000x on some startup or something like that, and maybe you invest in the next Uber or something like that. But at the end of the day, like, you keep grinding your money making machine. I mean, I just wouldn't try to get big valuations in your world.
Yeah. But, thank you for sharing that, right? Because there is no one way, to achieve the W at the finish line, right? Several ways to get there. And I think one of the ways that that's frustrating for the grinder entrepreneur is when you see these Bitcoin millionaires, right, that have $10, $15 million off of a $50,000 bet that they made 5 years ago, right? It can get a little frustrating. How do you combat that, right? For the people that have been grinding for 10 years with an insurance business that still only does 500-600K in revenue, and they're taking home 175.
Can I tell you a story really quick?
Let's hear it.
All right. So let's say that you're like an NFL player, right? Or let's just say you're a professional athlete and you make $400,000 a year. Okay? You make in the top 1% of everyone in the United States, which probably puts you in the top 0.1% of everyone in the world. So you would think that that person would be incredibly happy with that amount of income. But they're going to look around and compare themselves to like people that are making $3 million a year on their same team, and all of a sudden they start to feel a little bit poor. Okay? And then those people that make $3 million a year are going to compare themselves to like A-Rod or LeBron, and someone that's making 50, maybe 100 million a year. And then you're going to look at the people like A-Rod and LeBron, and maybe they're going to compare themselves to like a hedge fund manager who might make 100 million a year. And those hedge fund managers are going to compare themselves to the top hedge fund managers. And those hedge fund managers are going to compare themselves to some of the top entrepreneurs like Elon Musk or Mark Zuckerberg, who are making billions a year, and the wealthiest people in the world. And so almost no matter where you are in any universe, there's always going to be somebody who is making more than you. And I think that you have to be aware of that and have to be able to diversify what you bring to the world beyond just the capital that you make, but one of the things you talk about, how you make other people around you feel.
Yeah.
And I think that's how you justify it, because, I mean, I know people that have made over $1 billion in crypto, and I know people that work incredibly hard in helping industries like a doctor, psychologist,
social work,
social work, that provide an insane amount of value. And I respect those people equally, because I think money is one unit of measure, but it's not the only unit. Well, look, man, I want to be respectful of your time. We're edging up on an hour. I know how busy you are running your company. Is there anything else, like advice that you give to entrepreneurs or something that you want to close out with?
Yeah, so this is the nugget that I always share whenever somebody asks me that question, right? And I'll tell you that it was pretty easy to build our company from 0 to 2 million in revenue, right? Networking, referrals, business development efforts, prospecting on LinkedIn, right? All the shit that every sales guy wants to do in a B2B play, right? The way that we took it to the next level was we started picking up the phone and cold calling prospects at their desk. The conversion rate is abysmal. My recruiters have to make 250 calls a day. If they make 250 calls a day to senior VP wealth advisors on Wall Street, right, they're going to talk to 25 people, right, because they're going to get screened out or they're going to get voicemails. If you talk to 25 people, you're going to get one maybe, and you end up getting about 4 maybes in a week, and it takes 11 maybes in order for one candidate to change firms. Does that make sense? And so
Yes.
when you look at the number of volume, right, the number of sheer outbound dials efforts that you're going to put into it, it is laborious. It is deflating emotionally, physically. But the reason why our people do it is that invoice is a 6-figure invoice. That's the contract value. And so they're doing it for the check. They're willing to get kicked in the teeth, right, 249 times a day in hoping that they're going to get one yes. And so my biggest piece of advice is cold calling is not dead. It's a matter of finding the people that have the focus, the discipline, and the resilience to be successful in that role.